Hey guys, welcome back to the channel. For those of you who have seen my other videos, you know that I'm currently holding on to cash right now. I'm not buying into this market because I think another dip is coming. And in the comments section, people have asked, well, what can I do? Where can I put my money if I think the market will go down? So in today's video, let's cover that. As always, I am not a financial advisor. I am not a financial expert. This video is for entertainment purposes only, not financial advice. Do your own research. Now let's cover three different kinds of investments that you can make if you think a stock market correction or dip or downturn is coming. The first one is there are certain companies that do better when the economy does worse. And the first one that we should mention is stock ticker ASPS. This is Altasource Portfolio Solutions. And that's a very fancy name. And when you go to their website, what does this company do? Our solutions. We offer access to mortgage and real estate solutions that drive results. They're talking about foreclosures. So for people who are no longer paying their mortgage, banks or whoever owns the property goes to this company in order to foreclose on them. So they make their money off of home foreclosures. And if you want to Google ASPS, it's really fun to look at their share price going back about 15 years. For the longest time, this company's share price was hovering around the $18, $19, $20 mark. It doesn't pay a dividend. And then in the March collapse, it went down to 7, 8, or 9. So it lost over 50% of its value. It only recently, at the end of May, shot back up to about 15. So if you had bought down here at 7, 8, and then held it for a month, you would have gotten a 100% return on your investment. But let's go ahead and go back a year, go back 5 years. Looking at the share price going back 5 years, it doesn't look like there's anything special about this stock. But when we click on Max, you can then see what happened here. So in 2008, there was the financial collapse. And home foreclosures take time, to kick somebody out of their home. It can take months to even potentially years. So this company, their profits skyrocketed in 2012, 2013. The share price went as high as almost $170. So you look at it where it was last month. We'll just round up and say that it's been hovering around 17, and it shot up to 170. So that's a 10x increase. And when you look at the technicals of this company, it's actually all good news. They don't have any debt, and there's been a lot of insider trading. People familiar with this company, people who already own stock in this company, have been buying more. They know what is coming in the next couple years, 2 or 3 years, if the economy does not recover swiftly and people start being foreclosed on their homes. Additionally, back in 2010, there were way more shares of this company. There was 27 million. So this company, like many companies, has been doing a lot of stock buybacks. So 2010, they peaked at 27 million, and currently there's only 15 million shares in circulation. So there's only half as many. So if you wanted to recreate the conditions of the 2008 collapse, I don't think that will happen because that was mostly a housing-driven collapse. But if there's half as many shares, then the share price in 2013 wouldn't have peaked at 169. It would have peaked at 340. So buying stock today, even if it's at 15, you're looking at a 20x return if their profitability goes back to where it was during the last recession. For that reason, I think this company is kind of a steal, and I'm going to probably put about a couple $1,000 into it. But this is a hold strategy. You're going to have to hold it for maybe 2, 3, or 4 years before you see those extraordinary returns. And of course, it might not happen. If the economy does recover swiftly and people's ability to pay their mortgage is not affected the next couple of years, then this company won't be as profitable as they were during the last recession. The next place that you can invest is just an inverse ETF of the S&P 500. So this would be stock ticker symbol SPDN. This is an ETF. And it just tracks the inverse of whatever the S&P 500 did that day. This ETF is managed by a company called Exion, and you don't want to stay in this fund too long. It has a pretty high expense ratio of 0.78, and it just says this ETF seeks a return that is negative 100% of the return of its benchmark for an index for a single day. So you can go ahead and look at a ETF like SPY. This is the S&P 500. We can look at the last 5 days. Here's the last 5 days. It's just the inverse of SPY. And if you wanted to get really creative, you could jump back and forth between, for example, SPY and SPDN. If you think the market is going down, get in the other one. If it's going back up, get in the other one. It's a strategy that some people do. However, if you are someone who says that SPDN, the inverse S&P 500, is too slow for you, you need to go faster, well, then I recommend you look at TVIX, because this is a very fascinating stock. So let's just go ahead and read. What is it? TVIX is the Velocity Shares Daily short-term ETN, that's exchange-traded note, that tracks an index of future contracts of the S&P 500, and it's 200% leveraged on volatility moves. What that basically means is that when the stock market takes a dip, this thing shoots up fast. And you can go ahead and look at, let's say, the last 6 months. Okay. And holy cow, look at that. So the share price when the economy was good, everything was on track, hovering around 40, 50. Once again, this fund has a very high expense ratio. You don't want to sit in it for too long. And as soon as the stock market started dipping, it went from 40 all the way up to 800. So once again, that is a 20x return, so 2,000% return. And of course, after the stimulus bill was passed, the stock market started recovering, so it dropped from 800 a share down to 400 in basically 4 or 5 days. And then from 400, it's gone down to 140, 150, as low as 100. Oh, there you go. And to put my money where my mouth is, I actually did buy about $2,000 worth of TVIX. On May 26th, I had exited all my positions with all my previous stock holdings. I'm doing this because I think there will be another dip at the end of June or beginning of July. Normally, I do not try and time the market, but these are extraordinary times, and I'm just getting greedy, basically. This is a gamble, especially this kind of a fund where you have the potential to lose so much so fast. So let's run the numbers. What exactly is the risk versus reward of one of these high velocity ETNs? So we'll go ahead and say that the average cost for me when I bought in was $141. I bought 14 shares, total cost $1,974. On June 11th, on that day in the market, there was a 6 or 7% drop. The share price for TVIX actually shot up to 201. So my 14 shares became worth $2,814. So I was positive $840. It then dipped the next day on June 12th. It went down to 169. I'm still positive. I'm still positive about $400. But I'm going to hold this until I don't know what number I want to exit at exactly. I think I shouldn't try and get greedy, and if I can just get 400 a share, I think I'll exit at that point. But what if we had an identical dip, a third of the market being wiped out like we did at the beginning of March? What would that do? Well, the TVIX would go back up to about $800 a share. So if this happens in June or July and the price goes back to 806, I would then have $11,284, or a profit of $9,310. But what's the worst case scenario? The worst case scenario would be the economy completely recovers, we go back to how things were. It's like this whole pandemic and financial crisis never occurred. So TVIX would go back to potentially $40, $41. I would then lose $1,400 on my $2,000 investment. So when you think about the best case scenario, I'm up, $9,000. That's a 471% increase. Worst case scenario, I lose $1,400, so that's a 70% decrease. $2,000 really is my risk tolerance here. I don't want to try and chuck in 10 grand and then, make $60,000. It's tempting, but I can't do that right now. Okay guys, thanks for watching. If you enjoyed this video, give it a thumbs up so the algorithm knows it's good. In addition, if you have any other interesting investments that you've made, expecting the market to go down, leave me a comment down below. I will check them out. I'm very interested in this right now. And if you haven't subscribed to my channel, consider subscribing. I talk about finance and investing topics. And until the next video, take care.